Welcome, everyone, to this final episode of the special Capital Markets mini-series sponsored by Optimal Blue. Today, my guest is once again Erin Wester, Vice President of Product Management at Optimal Blue, to talk about the broader role of pricing engines in the lending landscape. Erin, welcome back to the podcast.
Thank you for having me. I'm glad to be back.
I am so excited to continue this conversation that we've been having about the role of pricing engines, right, in the lending landscape, because some people, they don't understand, and I didn't understand before we started this, how many parts of the process they really touch and influence.
Oh, yes. Far more than just what your mind goes to straight to the loan origination system. And it really branches out into the entire ecosystem from quoting to closing and even post-closing.
So I think a lot of people, including me, associate a pricing engine as a thing that's kind of plugged into the LOS, and then that's the extent of it. But it's really more like a universal adapter, right, that can be plugged into anything?
Yeah, that's a great way to think of it. So it is really kind of like the universal adapter that should be available anywhere and everywhere you want to expose your product and pricing. So it's really important that the PPE that you leverage, has the adaptable capabilities to have a single source of truth in terms of what you're managing for the types of products and the types of pricing you'd like advertised to whatever audience you're targeting at the time, and ensure that you can be able to service that out or serve that out to your users, especially if they have particular preferences on things like point of sale or things like CRM. And, the variety is always key there as new partners and new technology providers enter the space. You always want to make sure that you have the ability to grow as the demand grows and changes over time.
I really think that's interesting, especially because we're saying universal adapter, and it's very adaptable. So I know what a universal adapter is. That's a different thing, but I think it applies. It's just really very helpful. So maybe you could give some examples of those integration capabilities.
Yeah, absolutely. So if I like to think of kind of the mortgage cycle as a giant funnel, and up at the very top, the widest part of the funnel is, borrower inquiry, borrower search, really where they're just going out there to be like, I'm looking to buy a home, and what are rates like? Or most of the time they're really looking at what monthly payment can I afford, and how does that translate into the purchase price that I should be looking at? And a lot of that is, tied in some of the lead aggregators or just doing some of the searches on some of the standard sites that kind of have always been out there that folks are just used to using, that have that brand recognition. And that really kind of helps drive the borrower into understanding the lenders available in their space, be it their geographical area, the product type that they're looking for the home they're looking to buy, or the area they're looking to purchase in. And then that funnel kind of gets smaller as it goes down into really refining leads into actual deals or actual applications. But there's still a whole lot of gray before it hits the LOS. And that could be, customer relationship management systems or CRMs, point of sales. There's lots of different avenues that pricing can be displayed in. And that's just on the MLO side, right? The origination side. We also work a lot in the realtor space where you're doing open house flyers, and you want to make sure you have pricing and really tie those relationships together, because that's important to the originators that leverage pricing as well, to make sure that they're working with all of the counterparts in the mortgage loan process to get as many leads as possible, to get the brand and their name out there as much as possible. Then you get into kind of those traditional integrations like the loan origination system, which is, of course, massively critical. But not the only piece of the puzzle like it may have been many years ago.
Have there been any sort of outside the box integrations that surprised you with their success?
Oh, there's been a lot of companies that have, popped up, fintech companies that have popped up over the course of the last, call it, 7 years. That do some really neat things. And that's why, variety is so important, because everybody's needs in terms of the solutions and the providers they're looking for are unique. So finding a vendor that matches corporate brand and matches functionality needs, is very important. And you want to make sure that you kind of play Switzerland to all of that, and that you're able to partner with anyone and everyone to, make sure that you're opening up options and making the customer feel like, the financial institution feel like they have choice. And that's the big thing with the PPE and that universal adapter we spoke about before, is choice is paramount. you want to be able to let the choice today not impact their choice of tomorrow. And having, a centralized way of integrating is really important. Having a centralized way of ensuring that integration functions properly in a compliant, accurate, and realist manner is paramount. And we've seen that, we have over 70 integrations here at Optimal Blue. So we've seen that through quite a bit of, different changes. We've seen that through lots of different implementations, to your point. There have been quite a few creative implementations. And really the most creative, I think, are those that do that kind of what we'll call baseline level setting integration, where it's promoting the products and pricing. They let that sit for a while, and then they get creative on how they can integrate products and pricing into other areas. Like, let's do that kind of, if you will, MVP level set of an integration, and how can we deepen the product and pricing component throughout the life cycle of other features within that product category. And we've seen a lot of vendors really kind of knock that out of the park, that have just really, I think, enhanced the overall user experience with that level of automation.
Yeah, it's really exciting seeing what's going on there and seeing how far we've come, even just over the last couple of years.
Oh, yes. And really, it's just a large number of things, I think, that have impacted that. New entrants in the space, especially a couple of years ago, where people had, business was good. And so you were looking for all these different ways to capture top originator talent, to capture leads. And all these companies came out of the woodworks to be able to support all of that. And it really drove, I think, a big technological revolution in this space to show that you didn't have to be, somebody that had been around for many, many years. You could come in with kind of this fresh take and fresh look at things, and be able to present more tools for the originator's toolbox, to be able to gain companies more business.
So, we're finally in the cycle, part of the cycle where we're going to see rates drop, right? Very exciting. We know anytime that happens, we can expect another refi rush from homeowners, who bought in the last few years. So how does Optimal Blue support refi markets in addition to the purchase market that we might think about?
Oh yeah. So we've been through the ups and the downs of the cyclical nature of the mortgage cycle, or mortgage environment many times. And we've got a lot of different features that support the volatility of the rate market. So we have a number of different tools that customers can leverage depending on how they're trying to recapture business. So we have, and for different user personas in that life cycle. So we've got, for example, on the loan officer side, on the originator side, we have individualized rate alerts that they can set up on their pipeline. So they can have, a specific rate target that maybe they've discussed with the borrower on when they'd be interested in refinancing, with automated email alerts to be able to keep either the borrower and or the originator in the loop on, when we might hit that threshold of when it would be a good time to re-engage and refinance. And then we also have, our capture product, which does a great deal of refi thought process and product and pricing reevaluation for servicing portfolios. And then we also have our APIs, which are heavily used by some of the largest lenders in the nation to consistently reprice their pipelines, usually within a set of criteria around X days after closing, X rate percentage starting out, and some threshold that they're looking at staying within, and being able to do that in one bang. And then Monday morning, when their originators log in, they get a list of loans or a list of leads that they can track down to see if refinancing would be a good option for them.
Are there any specific features or tools that help manage these different types of loans?
Oh, yes. There's also, lock desk policies, right, that you can apply more broadly. And that's going to be things like what we call here at Optimal Blue, your float down policies. That can be very, very intricate for each lender, more so than I think really most post-lock policies, on the threshold of the tolerance of when a float down would be applicable, particularly for any of those applications that may be in flight during a big market movement. So there's lots of tools that you can use either at the lock desk level to set policies all the way through all of the users, as well as giving them tools directly in their hands, like the individualized rate alerts. So I think, variety, again, choice is king. So you want to give as many options as you can so people can pick and choose what level of interactivity they want for their users on that versus, if maybe they want to minimize risk and really keep that determined at the policy level. So it's really up to people's kind of tolerance on what end of the spectrum they like to live in.
It's really great, though, to give people that choice. And it goes back to the adaptability of the whole system. Let's look towards the future, right? That's always fun, especially when we're in this kind of environment where we think that's going to be pretty rosy compared. What future tech developments or innovations could we expect from Optimal Blue?
Oh, great question. So, at Optimal Blue, we've always been the PPE that's secondary trust. We prided ourselves on policy granularity, on very independent and granularized margin control, very intricate concession policy manufacturing to be able to really make sure we can support any version or flavor of lock desk policies for any time pricing is involved in the mortgage process. But our focus last year, this year, and into next year is really on user experience. So now that we know we can do it, how do we make this easier and more accessible and get ahead of the curve on how we can engage our users, or in a better sense, automate things for users to remove the thought out of the process. So you'll see a lot of that in the things that we'll be delivering both later this year as well as unveiling at our customer conference, the Optimal Blue, the Summit conference in the beginning of February in San Diego. We'll be showcasing a lot of what we're releasing in Q4 this year, as well as unveiling, like I mentioned, in February. And a big focus and a heavy lean on the originator experience is a common theme you'll see in those product unveilings or those releases. So some things that we're releasing here shortly is the ability to run optimized scenarios. So traditionally thinking in an LOS, you have a set of loan criteria and you price it, right? But we all know it's more complicated than that. It's more intricate than that. And the ability to offer the borrower more options to be able to truly understand what is the best product, what is the best rate for me to achieve the dream of home ownership, while maximizing profitability on the financial institution side. We're going to have the ability to create multiple scenarios, multiple loan scenarios. So you could say if you put 10% down versus 20% down, or conventional versus an FHA, or a buy down versus a non-buy down, and really educating the borrower on all of their different options, understanding there are certain things they can control and certain things they cannot. So really trying to put the thought into that to be able to give a results grid, a single view of all of those options, all those different loan scenarios, and all of the pricing impacts that each of those have. So that's coming in early Q4 for us here that customers will be seeing any day now. And then as well as continuing to lean into the usability of that, but layering in generative AI and automation. And that's an exciting thing we're looking forward to unveil in February, where we'll take out the thought of, okay, what do I need to adjust here and there to give a better loan makeup, to give a better product and pricing result for the consumer, and just have AI take care of that based off of the rules engine and how certain LLPAs on that transaction were calculated, or eligibility or disqualifier rules were fired. And that's really where the power of AI, I think, really comes into play. And it's our job as technology providers to make that not only easy to use, easy to understand, but without the user having to think or click a button or type in anything, being able to run that always for them behind the scenes. So we're very excited to get some of that out the door.
Absolutely. I've been reading so much about AI, and one of the things that is clear is that companies really want somebody to be the shepherd with them through that. Like, they don't really on their own know how you guys are using AI, how AI is part of this whole ecosystem that you're helping them with, and they need that guidance. They don't know it. They know they want to be using it. They know they want the efficiencies of it and all of that, but they don't really know where to start. So it's great that you guys already have it baked in.
Oh, absolutely. It's a huge learning curve for everyone, right? I mean, it's AI has been around for a while, but this kind of AI is exciting, scary, all of the emotions at the same time. And it's funny because a lot of our product roadmap, of course, the customer voice is a very high proponent that goes into generating our roadmap content. And this year, just a few months ago, we finished our road shows, which is where we travel 5 cities across the country, and get customers to get in a room with us, present them with our mock-ups and our roadmap, and get live interactive feedback there. And one of our questions was, are you looking to onboard any AI technology before the end of 2024? And it was an overwhelming no, actually, which shocked us. But I think it is just because people don't understand in this highly regulated industry, where can my risk tolerance be? And that's why, again, I think it's our job as technology providers, as you mentioned, to help kind of hold their hand along the way. And the best way to do that is truly have generative AI as an assistant. So there's nothing that's going to deliberately change the main components of disclosing back to the LOS, and anything that could have that kind of spidey sense of like, oh, I'm not sure about this yet. And how can we just get comfortable with the AI as that assistant to help the loan officer, the originator, work through things? And then as your confidence grows there, then working on automating it. The same is true for automating locks. And we have folks that usually manually decision their locks and always have. It's like, well, let's get comfortable with the workflow first. Then let us walk you through getting comfortable with auto accepting. And before you know it, that fear you had was a thing of the past. And I think a lot of that's going to be true as we all go on this AI learning curve together.
I've been to a lot of conferences in the last couple of months, and the overarching theme when it comes to technology is technology may not take your job, but somebody who's utilizing technology better than you are is probably going to take your job or take your business, take your market share, whatever, take your borrowers. So I think that is just key to what we're talking about, that you guys are the trusted source, so that you're guiding it, you've integrated it in a way that makes sense, that's safe, and they can count on that.
Absolutely. That's what we're here for. And hopefully our customers will agree when they get to see all this live and in action in February.
Yay. Okay. Well, along with the advancements in technology, how are you planning to continue supporting lenders in an environment where things feel like they're changing so fast?
Oh man, yes, I feel that. We feel that in our bones here. And really, it's all about communication. How can we make sure we continue to have the open lines of communication, particularly in the strategic nature with our customers, along with the tactical day-to-day kind of support? So we're doing that in a number of ways here at OB, both, as I mentioned, our traditional methods of our road shows where we're engaging our customers, our customer conference that will have, a lot of customer engagement opportunities and networking and panels, lots of different content that we'll be sharing there with a couple of different tracks focused on different user personas within each financial institution. But really, as our mission is, of course, to help lenders maximize their profitability and increasing their competitive advantage in the space to help borrowers at the end of the day achieve the dream of home ownership. We're going through and looking at all the different ways that we can, source that expertise out to as many folks as possible. So with our industry experience, as well as the amount of data that we sit on with our large footprint in the mortgage space, we have a couple of different ways that we're kind of expelling that content out to make sure that we're reaching as many people as possible. So we'll be launching a weekly podcast at the end of September, where we'll share things like data trends and insights to help not only capital markets, secondary market folks, but also originators. And then we also will have a podcast component that accompanies our monthly market advantage data set that we publish out today. So really putting a voice behind a lot of the data that, either we have and previously shared or that we'll be beginning to share with our customers and our users.
Obviously, I'm very excited about your podcast. I think it's a great way to communicate with people, really connect with them as well. It's a pretty personal means of communication. So that's exciting. And really, Erin, just all the things that you're doing, there's so much there. Thank you for sitting down and talking about the broader role of pricing engines in this lending landscape. Really appreciate you.
Oh, I am happy to be here anytime. Love being a part of it. Thank you very much.